So I've been doing some deep reflection on this strategy. It's not going well. We had originally back tested that day trading off the 200 SMA on a 5 minute chart strategy. Um, and that wasn't performing well. I switched to swing trading, and it looked like that was going to do better, but ultimately, the strategy's not performing. I had to take a big stop on gold. If I'm really honest, I know that the Kevin Warsh thing is weighing on gold due to the fact that he wants to sell off a bunch of the treasury holdings, which would actually be bearish for gold and bullish for USD. So I fundamentally know that. What that really means is I know that momentum is starting to come out of gold. So should I be trading that? That's the question I'm asking myself. If I'm going for a momentum strategy, then why was I in that? Well, I just closed the trade, but I closed it for a loss. So we've got more losses on the strategy. Crude oil is up and down. It doesn't have like clear up trending momentum. It's up and down based on whatever the geopolitical news is that day or that week. It's not a good trader. We traded MNQ a bit because I recognized the recovery was imminent. Like we were going to get a recovery on it. But after we had 4 weeks of up days, you know what? Let me pull up the charts here so we can actually go over some of this stuff. Okay, so this is what I'm talking about gold, right? We broke this trend and I was wanting it to align more with the uptrend again, but instead we've just been chopping around against that trend. We're not really going up. Crude oil, I did get back into because it does look like I did get back into because it does look like um, we're gonna, the US is gonna start going to war again. So, I'm trying to align with that uptrend here. So I got in on the 50-day SMA. Can we get some momentum here? Yeah, maybe. Bitcoin, Bitcoin really looks like a recovery here. It's starting to develop a recovery uptrend. Um, but as you can see, like it's not really following through. So I have to start to ask myself, what am I doing wrong? So last week I talked about how I was kind of broadening my exposure, right? So we started off with these basic trades, gold and crude oil that clearly had momentum. Gold's in question, crude oil's choppy. Like, I'm not really hitting the momentum. And that's the thing that I need to be honest with myself about this strategy. I kind of came into gold after the momentum was over, right? So what I did is I broadened myself. I broadened myself to earnings winners. That kind of went okay. We had a few earnings winners that went well for us, but the earnings winners that we're in right now are pretty mediocre. I don't know that they're going to produce anything, and they sure are taking a long time to produce something. So what I did is I extended my research from just looking at these mega cap and large cap and huge assets under management type names into mid cap and small caps. And so I showed you the spreadsheets on that last week. So I'm going somewhere. This is a whole thought process. I want you to understand how I came to this conclusion. I want you to understand that I'm broadening the search to try to find something that works. Because ultimately, what I want is I want a rocket type strategy, like something that's going to do like 300 to 500% per year. That's what we all want, right? Right now, my existing strategy, I'll just be honest with you, it's the T triple Q, a basic trend following strategy. It's very, very solid strategy. It's good for a solid 50 to 100% annually, and that is a very good return. But I want a rocket strategy. I want something that's going to return like 500% annually, right? That's what we all want. So that's what I'm going after. And what I'm doing is not reaching that goal. And I can see that. So I need to keep searching. So when I broadened out to when I broadened out to mid cap and small cap stocks, I started doing a scan on FinViz to find these stocks that are in an uptrend. They have momentum. So what I found is that there is a ton of semiconductor stocks that come up on that scan that are way up, right? So you can just see the charts as I scroll through some of these semiconductor stocks. So there's MRAM that was up, MXL. You can see a bunch of these names. It's, you know what? Honestly, this is not the greatest scan. Other days when I've done this scan, it's been nothing but semiconductors. It's like 80% semiconductor stocks, and they're all up a ton. Okay, so here's one that consolidated nicely, and now it's breaking out again, right? So there's, and in fairness, there is also some software names. There's different names that are running. But here's the thing. So I'm starting to cross-reference this. So semiconductors are running because of AI, right? Because we're building all these data centers, and big companies are basically writing almost blank checks for these chips that will power this semiconductor revolution or the AI revolution. Software doesn't have that going for it. In addition, if we take a quick look at one of the ETFs for semiconductors, you can see like it broke out and it just like pretty much didn't even look back. You don't see that so much with the other sectors that might show up on this scan. So what we're seeing here is confirmation that there's a theme, that sectors are running. I would combine that with something like this, with gold. So over here, when gold was running, in that scan that I'm doing right now, you would probably see a lot of like gold miners and different gold refiners, probably copper miners, any sort of, commodity related company that was going. I remember that when I was trading uranium a couple of years back, that was also the case. There was uranium miners and nuclear power companies, utilities that specialize in nuclear power that were running. So this is the theme. You may have heard of this before, right? We're looking for hot sectors that are running. And what I can see here from the scans, and like I said, that it's unfortunate that this scan is actually not the greatest, but previous days and even into last week, there was just so many semiconductor names that were running. Now they had already run. So my experience tells me that after something has made this massive move, now that's not the time to get into it. It's probably almost done. And from the charts that we looked at, I'm sure you could agree that semiconductors have run a long ways. However, this one, TRT, just broke out. So I did put in a stop order. I made a new paper trading account specifically for these mid and small cap stocks to track them separately from everything else. And I put in a stop order for this name just just to see how it goes, right? So we're staying curious, we're staying open, we're going to see what works here. Because ultimately, I don't want a wimpy weak strategy that's only going to produce a small amount of returns. I want something that's, a bit of a rocket, pretty dramatic. I want solid, strong returns. I don't expect it to work all the time, but when it does work, I'm hoping to get something that really moves. And keep in mind, too, that this is on the back of some work that I did a few years back, um, working on 50 SMA breakouts on the daily chart and 52-week high breakouts on the daily chart. And I tracked hundreds of those occurrences in a forward test. And what I found was that it worked really, really well sometimes for like a month or two at a time, and then it would stop working. And when it stopped working, you absolutely needed to stop trading it. You needed to recognize that fast and stop trading it because you're going to give back a lot of gains super fast. Um, but I'm just taking that experience and kind of keeping it in the back of my mind as I look into what could potentially work moving forward for the strategy. So right now, as I mentioned, to sum it all up, um, trading these larger cap names, maybe I'm early on Bitcoin. It's hard to tell. Maybe I'm late on gold. Maybe it's over. Uh, Crude oil, maybe I can get another run higher. We'll see. Um, Overall, the semiconductor sector, I think we've got the right idea here. Like, I think I have the right idea in that based on this ETF as an indicator and a fundamental driver, right? That we're moving, AI is moving the earnings forward on a lot of these companies, that we could potentially have traded this on momentum. So the trick will be to try and find when momentum is happening early enough and be able to identify these thematic hot sectors early enough. So, I'm going to leave you with this one piece of wisdom. Look, guys, developing edge on a strategy and figuring out something for yourself to be able to trade something and make a lot of money at it takes time. Like, even for me, who's developed edge on a number of strategies, I have successful strategies. Like, it takes time. And that's just the reality of the situation. And I think what you need to do here is you really need to put the money on the back burner. And you need to enjoy the process of being curious, learning about what it is that you want to trade, learning more about it, and just kind of doing a little detective work, just getting interested and figuring it out. How does this work and how can I make it work? Um, where is the edge in this? I think that that needs to be the focus. You just need to enjoy that process for now. The money will come later, and the money will almost be a byproduct of this work that you're doing right now. But if you can just enjoy this part of the process and just take a breath about the money, then you're on the right track. As always, if you agree, disagree, leave me a comment, like, subscribe, and I'll see you in the next one.